I think in order to understand that, we must take a step back to see how things were in the past. And how things were in the past for GCC, where they tapped the capital markets, the traditional ports of calls were really London and US, Europe and US. So many of the market practices are aligned to those historical practices. So now you have heard that there are fundamental beneficial aspects to closer alignment. In the past, because the markets was comfortable, so we just stuck to traditional ways of doing business. Now, the global climate is becoming a little bit more uncomfortable. So markets are starting to realign, to relook and be more deliberate in what they want to do. So for example, where historically GCC bond transactions, they open their books, start collecting orders London time. It goes into US. Now, knowing the liquidity pool in Asia, it starts at Asian times. And frankly, by the time Asia is over, London comes in, the books are many times covered. So the proof is in that. And the GCC issuers are very quick to share positive experiences as well as negative, but in this case, positive. And so more and more are starting to do that. So there's one market practice that's going to change. But what, and to Darren and Jameson's point, we're really just at the beginning stage, because like I said, this year saw a turning point, but more can be done, more needs to be done. Asian liquidity is plentiful, but also many times they are not as educated in GCC credits as yet. So we must be more deliberate to understand, to explain, to do more roadshows, and so for GCC issuers to be more patient. Adani has got this pinned down because they tap the world capital. They know when to develop new pockets of liquidity. So GCC issuers can do that and can do more of that. In Asia, much of the liquidity, they're also encapsulated in domestic markets. The mention of panda bonds. We brought several GCC issuers onshore to China to meet regulators, meet investors, all that part of the development. So once that happens, then they are able to crack into a $20+ trillion bond market, which is desperately looking for diversification. So all the intrinsic elements are there. We just need to make a more deliberate step forward to develop it and realize it, and for there to be more growth. We're just at the beginning part, and I'm confident that more can be done, especially, like I said, in this new world order where changes are needed.